The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out with the DAX as we usually do. As you can see here, just a few days ago, we made that big ABCD pattern down there. It was also a 38% retracement of a move going way back a lot farther. And we've had this huge rally that has been, of course, accentuated here in our markets, and they continue to be accentuated. Folks, if someone asked a question about the news versus this, folks, this thing did not defied news for quite some time. It wouldn't make any difference, what the news. If we can withstand a nuclear holocaust and all the other things that have been going on, this market goes where it's going to go. And who knows how high that's going to be. We will have Bill Meridian on at the break to talk to us about this from Cycles Research out of Vienna, Austria, and he's always given us some really good things. He's got a very, very full program today, so we'll have to get through that relatively quickly. Okay, after we looked at that DAX, the next thing we want to take a look at is this is the chart that we were looking at here just a couple of days ago. Fact is, on Tuesday, of the Bitcoin, the fact that it had, made that beautiful retracement, Gartley pattern down there at 1250. And I just wanted to bring you up to date what's going on with Bitcoin as of tonight. You'll be able to see just one second here when I put this up. The reason why I'm bringing this up, folks, is, because first of all, yes, it's acting like a bubble because it went from nowhere to 20,000, but, we live in interesting times, as the old Chinese curse. But if you'll notice what happened last night, Tommy O'Brien was talking about it this morning on his show, right before mine, about the fact that we moved, well over 1,500 points in the Bitcoin in a matter of an hour. So you can see that big wide-ranging bar. And this sets up, a move, well into the level of 17,600. And if we clear that, it could go a lot higher. Look what's happened to gold here, folks. The gold has gotten legs. I mean, this thing just does not want to back off. Yesterday's pullback, all we had was a $16 pullback in gold from the high yesterday, and then we went up and made new highs at 1328. So this is telling us that looks like the gold market really wants to go a great deal higher. Whether we get a $34 correction, we'll be able to see. Yes, some people will say that that Bitcoin could double in 2018, but I've seen people saying that it's going to go to $1 million. That would be a heck of a move. One thing, if you'll folks remember, we had a webinar about a month or so ago with our good friend John Jameson, who's going to bring out the Jameson letter in a week or so, and he was talking about the stock of ADA, which is Cardano. And Cardano at that time was selling at 4 cents a share. Well, Cardano closed yesterday at $1.20. I know it's only pennies, but there's a lot of people trading this. The volume they report in the cryptocurrency group is the same or more now than the New York Stock Exchange. But remember, when you're trading penny stocks, that's not the same thing. So don't let that figure, the dollar amount is, insignificant. We're talking trillions in the stock market and billions in the cryptocurrency. So there's a huge difference there, but it's something is different here, and it is new. So we want to sort of watch it, if nothing else, because there could be, some opportunities come up that, maybe not as good as Bitcoin, but something that would be, very, very low risk, and then seeing, how it's going to happen. The problem is we have these cryptocurrency exchanges that, I don't know what they're based on or anything, but look, the CME and the CBOE have brought out these cryptocurrencies and futures now. It's been out a couple of weeks, and we've had virtually zero increase in open interest. We're trading around 800 contracts. I mean, folks, that's a flat out failure as far as opening a new exchange product. That's just not very good. Okay, let's move on to something that's very important. Yesterday, we were talking to our good friend Mr. Z about the potential in the cocoa market. And yesterday, the market opened down around the 1830 level, and right now we're trading at around 1890. So that has basically covered your original risk. If you did anything on that, your stop would be below yesterday's low, so you'd be in that trade, pretty much, risk-free. That's the one thing that you'd want to be looking at, because it's got a possibility of going down one more time because of the big ABCD pattern on the monthly chart, and we could be there already, but we'll just put it up here to show you that that's what we could be watching now. We don't trade cocoa often, but this is a really big one. One of the things that Bill Meridian is going to be talking to us about today is the fact that the commodity index is turning up. In other words, we're going to be seeing high prices in some commodities. We've already seen some of it in, crude oil's had a pretty good bounce, but it's run into some pretty good resistance here at $62. But the grains have also showed sometimes some type of bottoming pattern, like we've seen already in soybeans that have moved a great deal since Tuesday, and then corn and also wheat eventually could be. We'll be watching these, of course, very, very closely. Now, on Tuesday here, next Tuesday coming up, we've got a really big thing happening. I'm going to contact our good friend Norm Winsky from Astro Trend to talk about it, because we've got three major conjunctions. Conjunctions is where the planets are at 0 degrees. If they go to 180, that's an opposition. But conjunctions is the start of things. Conjunction is basically when you have a new moon. That's a conjunction. When you have an opposition, you have a full moon. So we have three major planets. We've got Venus, Mercury, and looks like Saturn. No, it's Venus and Mercury. Then we also have the Sun with Venus, and then we also have the Sun with Mercury. So that's it. That's going to be a really big one. That's on the 9th. So we'll watch it. One second, please. That's what we see, what's going on here. Bitcoin, folks, it's a wild, wild west. We don't know what's going to happen. There are 1,200 cryptocurrencies out there, and they're not all going to make it. And there's some scams going on out there, too. So you got to be very, very careful. And if you put anything in it, don't put in very much. I've been doing this for a long time, and I have a lot of contacts and a lot of friends over the years. I can say that I know 3 people personally that have been involved in Bitcoin, one on a pretty substantial level, another one on 2 others on a relatively a smaller level. They've all done very, very well because they did this a few years ago. But it's really it is the wild, wild west. But there's must be something to it, because it's not acting like a bubble. Look at the chart on Bitcoin. That's a perfect chart. I mean, that's technically Mother God and country.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted the chart of a price line. We talked about that yesterday. We were trying to see if price line Charlie was still down in Mexico, but we haven't heard from him for quite a while, so I don't know whether he'll be back in the air or not. But we do have a perfect Gartley pattern there in Priceline, and the question that the listener asked was, how could Priceline go down with the stock market, being up so strong yesterday? Folks, it's a market of stocks, and not every stock is going to go up. They have advanced declines every day, and this happens to be one that declined. It went a little bit higher than the previous day by a couple of dollars and then broke $40. But, remember, this is an $1,800 stock, but it trades, very nice technically. So all of these stocks do. Just look at the chart of Bitcoin. My gosh, you could teach a class on Fibonacci and, the patterns that we look at just by looking at Bitcoin. You could do the same thing with Priceline or soybeans or any of those things. So, we need to keep a very, very close eye on this. Now, one of the things that Bill Meridian is going to be talking to us in about 10 minutes is about his outlook for the U.S. dollar, and Bill is looking for a really big drop in the U.S. dollar. We're trading around the 91.70 level. We've posted that Gartley pattern that is so important on the on the ABCD pattern on the dollar index at 91.50. As long as it can stay above that level, it certainly looks good. But if it fails, there's a lot of reasoning to say that this market could easily break down. Let's just take a quick look at this. Since we're looking at patterns, and we've got Bill coming up pretty soon, you'll notice that we did stop at the 50% and 38% level, back in September. We had a little bit of a rally that was not even a 382 retracement, and there's the ABCD that's forming right now. We got as low as 91.50. I think we're close, probably trading around 91.70 right now. But if this breaks down, folks, you can see the ABCD structure's going to take you all the way down to King Dollar, which, Tom coined, way back in 2011 when it was trading at, 73. So that's the main thing. Yes, the Australian dollar is Oh, excuse yes, another gap in the Dow Jones. You're absolutely correct. That's the ninth one, Tucker. I don't know when they're going to be filled. Maybe this is the first time when they're going to, send technical analysis into the locker room and lock the door. I don't know, but history says that these gaps will be filled. The $64 question is, when and in my lifetime. The only thing that as we talked about yesterday when Z was on the air with us, that there was really no reason to try to pick a top yesterday. The only number that we had there was at 2719 in the S&P, and we went through that like it didn't even exist. So the most you would have to risk there at the very most would have been 3 or 4 points, and even then we didn't think that was the right thing to do. The one we really want to watch here is coming in here on the 9th. We've got several people. If you remember, we had Stan Harley on yesterday talking about the importance of that 110-day trading cycle that looks pretty interesting. We also had Norm Winsky on, and then, I'm going to have Norm on again on Tuesday just for a short period of time to talk to us about these three things, because this is what is known as Combest, and it's a double because you have Mercury and Venus together, and that's basically like a full moon. A new moon. So you've got Venus at a new moon, and you've got Mercury at a new moon. And when we have the Earth at a new moon, we know what the Earth at the new moon does. You can imagine what these, and the moon is just a satellite. So with these two other planets, this should be really, really spectacular. As a matter of fact, I just remembered there's a fellow here at TFNN who really understands this stuff quite a bit, an old friend and student, Steve Rhodes. We need to get Steve Rhodes into the picture on this. Steve, I don't know if you're listening today, but I haven't seen whether he's in today or not. But if you are, Steve, please take a look at this date of January 9th coming in. It's triply important because the 8th is Elvis's birthday, and then the 9th, of course, we have this. We have 3 conjunctions all coming in at the same time. So I'll ask Steve to go in and take a look at this, because this is something that's usually, pretty. Fletch, don't do that, right? They're saying something like everyone wants to go to heaven, but no one wants to die. And the market is the same. You're absolutely correct. This is the market will go up until it won't go up anymore. That's it. If you remember, Will Rogers, the great philosopher, said, buy stocks that go up, and if they don't go up, don't buy them. So it's that simple. And we'll keep an eye on these as we go through. But anyway, January 9th looks like it might be. This is a Friday in an up week, folks. The odds of the market, you're sure it's high, it's going to open higher today, but the odds of it closing lower today are not very good because you're Friday in an up week and an up month, in an up year. I mean, I wouldn't fade it. But, right after that, then you've got some other stuff that might look at it. And, maybe it tops today. I don't know. And maybe it's a short-term top. Maybe it's, who knows? All I'm waiting for is a pattern that can give me some type of an indication that you don't have to risk very much. I haven't seen any of that. The only one we had, of course, was the IWM, and that worked for one solid day and then went right back above the old high, so you knew you were wrong once that happened. So there's, like I mentioned yesterday, there's just so many other things that are fun to trade. Just look at anything. You can look at the grains, look at the move in soybeans this week. Look at the move that we've had in gold. Look at bonds. I mean, bonds are making a nice little Gartley right now as we speak, up in this 152 and change levels. So keep an eye on that one. That's another one. And these are very, very low risk. They trade as much as you get with the stock indices. And by the way, the stock indices yesterday, as big a day as it was, we had, of the 4 major stock market indices, it was the only S&P that had an increase in open interest. The Dow, as big as it was, up 180 or 200, had a minus increase in open interest. The Russell, the second biggest, also minus, increase in open interest. This is not bullish, folks. I don't know how long it's going to last, but it's definitely not bullish. So keep in mind that when you don't have the players coming in, it's just a matter of time till that last bull buys, and then, those gaps will be filled probably very, very quickly. They'll probably fill 2 or 3 of them within one day. I know you don't think that could happen, but history says that markets that go straight up have a tendency to correct. That's the old Isaac Newton's second law of motion. Okay, let's go on to the next one. Someone's asking about the price of, hold on one second, of crude oil. Let me bring this up here because this is the long-term crude oil chart we're looking at here. This is, you're right, Marie. Hold on here. You'll see we have an ABCD pattern up here at the 1.618 expansion, and that's at $62. Now, folks, we closed just last week at around 60, so we're up a little bit this week. But considering how the news is out there, I would think that oil would have been up at least $3 or $4, and heating oil is really acting very poorly. And with this weather as cold as it is, it's absolutely amazing, Okay, we'll take a little break here. We'll be back with Bill Meridian of Cycles Research, Vienna, Austria.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Bill Meridian from Cycles Research, Vienna, Austria. Are you there, Bill?
Hi, Larry. Happy New Year.
Happy New Year to you. How's the weather there, by the way?
It is about between 45 and 50 and gray.
Oh, wow. Any snow?
No, none.
Okay, go ahead. I've got you started here. I have one question from one of our listeners first, Bill,
Yeah.
and that is why do you think that the Bradley model has been such an underperformer over the last couple of years? Do you have a feeling about that?
Yeah, it's on my website, billmeridian.com, under articles, the Bradley indicator and why I don't use it.
Okay.
And I'll tell you in there everything that's wrong with that model.
Okay.
It was a good model in 1948. In 1948, I mean, how much data did the guy have? And he had no computers, and he assigned pluses or minuses as to aspects, to regular Ptolemaic aspects, as to whether they make the market go up or down. Nowhere in the book does it say how they were derived. It doesn't say what data he used, over what time period he used it. That's just the beginning. And he rated the 90-degree square between planets as having the same effect as the 270-degree square. He did the same thing with the trines. I disproved that. I showed that in the article. He left out the north node, which is another mistake. But I do note the turning points. I write all those turning points down, and I compare them to the turning points I derive by other methods, but I don't follow the curve. And that was the reason Arch Crawford developed a composite cycle, which was based on real data to overcome the shortcomings in the Bradley model. So that's the short answer, but the long answer was up on the website.
Okay, that's great. You want to go ahead and start the show?
Sure.
I'll be happy to post the charts as you go. I'm starting with today's perspectives.
Yeah, well, the economy is performing as Cycle suggested in my book, Planetary Economic Forecasting, where I took the Business Activity Index, which I sent you a copy, which is U.S. economic data back to 1790, put together by Ameritrust Bank, and I found out the Jupiter through the sign cycle, 12 years long, was the most powerful, but there were 5 others, and I put them all together into a composite, and that composite was flat for 8 years, and it turned up this year. And I've been saying for the last, 5 years or 10 years, that there would be an economic boom. So now it is the soft numbers came in, which are sentiment numbers. Now the real numbers are coming in. And that is the reason the market's been rallying. So stocks, I'll show you all of the cycles here in 2018, but right now I have to tell you I expect the market to be higher 12 months from now. So that's my outlook. There'll be a correction somewhere during the year, but let's go. The first cycle is the usual combination of the 1-year cycle, the 4-year cycle, and the 10-year cycle, which right now, beginning this weekend, declines. However, all these cycles I'm going to show you all decline for the next 2 weeks, but I need a confirmation from the advanced decline line, which we'll look at in order to give a sell signal. So that's how it looks. It doesn't look very different from most years. You notice a very weak. It projects a weak September, and it projects correction in Q2. So let's go to the next slide, which is page 4. That is from my software, JStocks, which takes all of the price data from 1885, extracts the cycles, tests them to see which ones make money and which ones don't, and puts them all together again. It also declines, as you'll note, over the next 3 weeks, but it shows a relatively strong market with a peak sometime up in early October, 1 month later than the 1-4-10-year cycle combination shows us. And if we can go down one, we'll look at one more. This is all years ending in 8. So it's 1998, 2008, all the way back to 1888. And this one I give the least weight to. But I will say that years ending in 8 have rarely ever topped bull markets. It was true, it was very weak. It was very weak 10 years ago in 2008, but very rarely do you get the tops of bull markets. You do get corrections. And this one also suggests a correction in Q2, Q3, in the middle of the year. But let's look at the advanced decline line. It just hit a new high yesterday. So as long as that is hitting new highs, I can't really call for a correction. And I myself have a bunch of leveraged S&P positions in my personal portfolio, and some recommended in the monthly letter that I'm still holding. So if this starts to diverge from price, I'll look at the cycles and then I'll use that to pick a low. But at the moment, I just don't see it. And yeah.
Go ahead. No, I was going to say it certainly goes up every day. It doesn't make a difference what the news is. Someone asked a question this morning about the news. I said that hasn't anything to do with about anything for a long time. When they have a nuclear potential of nuclear war and the market rallies 200 points, it tells you that they're not worried too much about it.
Yeah, well, according to my friend, again, Jim Dunnigan at strategypage.com, which I think is the best and most unbiased view of the military, he says they don't really have any working, they can't hit the United States, North Korea. It's a non-issue. And I spoke to a telemetry operator off of one of the Aegis missile cruisers in the Gulf about 5 or 6 years ago. And he said, I watched the Iranian missile launches. And he says, I watch them on a tube, from a satellite in space. And he says, as they go up, you can see parts falling off of them. He said, these missiles are failing. They're duds. They're failures. They're not testing for an EMP attack like you saw in the movie GoldenEye. These are just duds. The missiles aren't reaching their altitude, and they're falling apart. I watched it myself. So neither of these are really a credible threat right now.
I remember back in the old days of the Cold War, they had that movie, The Russia House, with Sean Connery, and the whole premise of that was that, yes, Russia had nuclear weapons, but they couldn't even hit Montana. That's how poor the delivery system was, and that's pretty much what we're seeing now, I guess.
That's what I think.
Okay, now the next one you're going to talk about is, wow, something in the news, Bitcoin. What's your feeling on this? Is this a bubble or is this for real?
Well, people kept asking me what it was about, and I went to the U.S. I think I told you last time I had one meeting every 3 days about Bitcoin. The best one was with Professor David Yermak, NYU's expert on this area. And here in Vienna, I'm going to see them next week. They're starting a cryptocurrency department in the School of Economics here in Vienna. So that's the kind of attention it's creating. But Yermak said, well, look, big companies they can eliminate a 2% charge on transferring funds if they go over to cryptocurrency. So that's what they're doing. And he quoted these huge numbers of like one company hiring 200 people who are analysts in deep data. So if they see a way, if these big companies, they have the capital and the R&D, they can see that they can eliminate some charge and fatten their margins, they're going to do it. So this is real, and I have no doubt it's going to continue going on. But my guess is only maybe Ethereum and Bitcoin are going to survive, and all the others are like, if I can make an analogy to the automobile days, they are Packards and they're Studebakers, and they're going to fall by the wayside.
Oldsmobiles?
Just the way all the old computers, like if you remember the Osborne, the Zeos, and the Zorba, which some people out there never heard of,
including me.
They'll all get blown away. And so, and I'm almost sure the government is going to do it. They'll Amtrak it. They'll come in and say it's got to be regulated. And once they start doing that, but the big companies will continue to use this, and I'm almost sure there'll be some sort of a way that private individuals can use it. I just don't think it's so strong at the grassroots level, and it makes so much sense. I don't think anybody's going to stop it.
Hey, Bill, we got to take a break here, and we got a question about the Iranian situation coming up from the break. So we'll be right back with Bill Meridian of Cycles Research, Vienna, Austria.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we have Bill Meridian of Cycles Research. Bill, the question that I've been asked is what is going on with the Iranian situation and how much effect could that have on the oil market?
Well, number one, I just think oil's going higher. I'm not factoring Iran into that. It's going higher under its own steam, which I think is greater than expected economic growth. Like, it's caught everybody by surprise. And as far as what's going on in Iran, in terms of astrology, Uranus is right on the progressed moon, right opposite the progressed Mars, and Uranus-Mars is riots. When Uranus hit their natal Mars, I wrote an article that was published in the national newspaper in Abu Dhabi in the UAE, predicting that in advance. Mm-hmm. And this one I didn't see coming, but Uranus is going through there pretty fast, and so this is going to end, I think, pretty soon. So I don't think it's a major upset of the government. But they have a ton of money, and the U.S. military advisor used to live next to me in Abu Dhabi, and I said to him one day, I said, most of the technology, they have this high-tech stuff, can they actually operate it? Is it going to work? Well, they does. And he said, well, it's the same assessment we have. I said, but they do have a lot of people of eminently draftable age, which makes a very large infantry and tank army. He said, that's exactly the way the U.S. was viewing it. And so it's still that way.
Okay. You want to go to the next chart, which is about the sectors?
Well, Bitcoin, we hadn't finished.
Oh, sorry. I'm sorry. Go ahead. I've got the Bitcoin chart back up.
People
1 second
ask me,
again.
What do you think? I said, well, the only two things I can think of is either doing an S-curve on this or an Elliott wave. And so I'm an Elliott wave amateur. And so I counted it. I said, well, that long wave we're in, that's got to be a 3. So the previous waves have to be 2 and 1. I said, wave 3s are followed by wave 4 corrections. And I said that back in October and November, and here we have that drop. Now you see that one decline where I've got the 3-4, and then you see a little rally up. We've got to have another decline down like ABC, and my guess is to 38.2%, which is about 12,200. When it gets there, I'd be a buyer of it, and there are 3 stocks that I know of: Overstock, which is OSTK, Riot Blockchain, which is RAOT, and Longfin, LFIN. And Overstock actually has some fundamentals to it. Riot has bought some blockchain companies, and they're trying to make something, and Longfin is supposedly going to replace all of us, Larry, by pulling together artificial intelligence, and they're going to predict markets, and good luck with that. So I think they have the least fundamentals. But those 3 have all come down sharply, and I'm looking to buy Riot back on a 5th wave rally up to new highs. Then I think you'll get a serious correction sometime this year, probably out in Q2 or Q3. Mm-hmm. So performance of the sectors?
Yes, sir. We'll get that up here
So
right now.
if the market's going up, what sectors do you buy? Well, technology, I'm an old technology guy from the late 80s, so I think that's going to stay in first place. Financial stocks, the banks benefit from higher rates, and I think rates are going higher, so I'd hold those. Industrials, you got to pick your stocks right. Now, the energy sector that you see there right below S&P 500, which is the benchmark, 2 weeks ago, that was down in ninth place, and it's jumped 4 ranks, which it's only done 7 times in about 25 years. So I think if you look in the energy, if you're looking for stocks that are beaten down, you don't want to take a great deal of risk. You don't want to buy Google or Apple near a top. I would look in the energy sector, and then there you have a mix of stocks like Schlumberger, which is hitting new lows. I wouldn't buy it, but stocks that are shaping up like Rowan, RDC, or Valero, VLO, that actually look like they're starting to put in bottoms. I haven't bought them yet, but I have my eyes on them. And telecom, what can I say? The relative strength of telecom just keeps going down. And utilities don't look very good. Real estate, not very good. Healthcare, it's a mixed bag. You can find companies that will do well, and as soon as they sort out what they're doing with healthcare in the U.S., and consumer staples, there's a lot of food stocks, which I used to follow. They suffer when commodity prices go up. And I wanted to make this point that back in Q3, at the end, I did a report for institutions which showed of all the major commodities, they had all made on a monthly graph 78.6, 61.8%, 50% retracements. I said, wait a minute, if they're all doing this, this tells me you've got to get some sort of a rally, and then the dollar turned weak. So, and these stocks fell out of bed. And I know, I used to follow them for Value Line, that if food prices go up, they have a very hard time passing increased costs on to their customers, so their profit margins get squeezed. So I wouldn't buy a consumer staples stock right now. So can we go to the next one?
Sure.
Now I put this in my newsletter every month. These are the dates when these companies report, and according to my cycles work, the first 3 should rally because we have cycles turning up in a very narrow time period, right around the 18th for IBM, the 18th for Netflix, the 24th for eBay, and bearish for Google on the 25th. So what I do is I just check out the chart the day before, and I buy, and I usually hold 1 or 2 days. You have to note that this method will not work if they shift these dates. If they postpone it or they announce early, then you have to bypass it and go to the next one. So I wanted to throw that in.
Okay.
So if we go to the next slide, gold, that is the monthly cycle chart, and that tops in mid-February. So I think you've got nothing to worry about with gold until mid-February. And if gold is going up, shouldn't the dollar be going down? So let's look at the DXY cycle, and you'll note it doesn't bottom until the end of February. So commodities up, the dollar down, but the dollar's going to come back. And I think you've got to wait till late February for that. But I think the single potential most profitable trade coming up is in bonds. Now, let me explain how cycles research works. First, you look at the annual chart. This is the annual histogram for December only. The histogram is the likelihood it's going to go up. Like if it goes up 60% and it goes up 30 basis points, 0.6 times 30 basis points is 0.18. These are the blue bars that you see. It's expected return, probability times the profit or the loss. And you see that sharp drop there that I have with the arrow. Now let's go and see what actually happened. You see the gap down? That was that time period. Now I just don't go ahead and buy it because I see it in the annual chart. What I do is if you turn to page 14, the next one, it says December's decline.
Got it right here.
There's been a seasonal decline at that time in December. That's the annual cycle, which is static, which means it doesn't change very much. The dynamic cycle is what JStocks does. It extracts all the cycles that are currently active up to the close yesterday, sorts through them all, and knocks out every one of them that doesn't make you any money, even though they're statistically valid, which is something most cycles people have missed. The annual cycle shows that notes were down 83% of the time in that time interval. So if the dynamic cycle also points down, logically speaking, the odds of a decline had to have been greater than 83%. And some trader once said, if you could be right 60% of the time, you can make a fortune. So let's move up now and look at the next one. This is the same study done for the months since 1982. The red line is red on the right scale. That's the probability of it going up. The blue line is the percentage that it would go up, and the green line is the product of the first two. In other words, the green line here is the expected return, but I'm showing you all three bars. Look at the month of March. March has been up only 22.9% of the time. So what do we need next? We need to go to the dynamic cycle on the next page, and you'll note that this thing tops, around February 8th. So is that down period on page 15 confirmed by page 16? The answer is yes.
Stay with us, Bill. We've got a few more minutes at the end of the show. We'll be right back with Bill Meridian of Cycles Research.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Bill Meridian of Cycles Research. Bill, I've got your chart number, page 16 on 17. Okay, let me go on to 17 and I'll be ready to go. This is the one I wanted to talk about anyway. I think that's the one with notes, and then right after that we'll do oil.
Yeah. Well, I just wanted to give you, now that we've used the telescope approach, which I just went through before the break, this is the microscope approach. Let's look at every day in the month of March. Well, you tell me, is the expected return largely positive or largely negative? And you can even see that period to the 18th through the 25th is especially bearish. So this is the Cycles Research methodology. I have this on Notes Gold and Stocks in every issue of the early warning service. But I wanted to show you, what I'm not showing you is an academic will look at this and say, okay, well, that's an average. How do you know it's going to happen this year? And how do you know it's going to begin on the 18th and end on the 25th? I use projected turning points. In other words, the Gantt-type day counts or the Fibonacci expansions. And if they fall, and it worked perfectly in the month of December. I haven't computed those turning points yet for February, March, so I can talk to you about that next time I'm there to get, I mean, for example, that decline may run from the 20th through the 27th, or maybe through the 23rd through the 31st. We will not know that until we get through further into February. So oil, and
the next one. Okay, I'm ready.
My number one graph is that one in the business activity index that showed the economy greatly strengthening in a real sense. And I think you're getting a real demand for oil, just the way you're now going to get a real demand for loanable funds, which is why interest rates are going up, which is beneficial to banks, which is why the bank stocks have more than doubled since the July 2016 low. And here you've got oil, and I don't see any, let's see, we've got a minor high here coming up at the end of the month, but I'm not, I have a target on it of about 65, 66, and it was in this little formation that you see, the heavy black line there, a little bitty triangle that it broke out of in December. When it broke out of that, I said, well, that's the signal. It's going to the mid-60s.
Bill, thank you for joining us, my friend.
Sure,
we'll have
Larry,
you on
anytime.
again. Yeah, Happy New Year to you, my friend, and may God bless you. Tell Surya Happy New Year for me.
I'll do that, Larry. Bye-bye.
Okay. Oh, you bet. Bye-bye.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.